H&M share price stumbles as third quarter profits miss expectations. Welcome to Market Insight. I'm Ramzan Karmali. Well, the world's second largest listed fashion retailer has abandoned its 2024 earnings margin as its operating profits between June and August came in over 25% less than predicted by an LSEG poll of analysts. So what's going wrong for the Swedish firm, and can they turn things around? Well, to help answer that and more, I'm joined by Zoe Gillespie, Investment Manager at RBC Brewin Dolphin. Zoe, thanks so much for joining us. Well, sales at H&M were poor at the start of the quarter, and that was partly blamed on the weather. But H&M's problems are a lot deeper than that, aren't they?
It seems to be because, as you say, they've abandoned their margin targets. It seems to have been impacted by supply issues, higher marketing costs. But from a comparable basis, if you look at competitors like Inditex, who last week reported really strong results, it's like two retailers are operating the same space with very different results. So I think a lot of it has to do with maybe how they're positioning their products. And as you see, they're being impacted a lot by the competitors and some online retailers too. So the 10% margin that they were aiming for hasn't been met since 2017. So it's certainly been a big disappointment, and the share price is reacting today.
And it's not so long ago that they appointed a new CEO, I think it was at the start of the year, and his job was to return them to profitability. Is there any signs of him succeeding at all?
Well, I think they're starting to look at cost cutting with some of the store closures. So they're looking at that. And I think they have been, as I say, investing heavily in marketing spend, which they've taken on Charlie XCX pop star to get some sort of younger people and involved in trying to boost sales. So I think they're trying to get marketing at the forefront. September sales have been up 11%. So going forward, it looks as if things are looking a bit brighter going into the autumn and winter collections. But it's going to be a big turnaround story. And when you've got strong competition, you have to do something a little different because the consumer is being hit by cost of living crisis. And there's a lot of different options for people. So coming up with different ideas and different strategies is going to be needed to turn this around.
Well, let's stick with retail and perhaps disappointing news from Pepco, the owners of Poundland and Dealz. Their annual revenue is down over 3% this year, but shares are higher today. Why is that?
They are. I mean, I think when you looked at it, certainly the revenue was down. It was actually up 10%, but like for like down 3%. And a lot of that was due to store openings. But certainly when you look at it, they're opening a lot of stores and they are expanding. They can also attribute some of this to supply issues. They've blamed shipping from Suez and certainly moving on to different merchandises. So the market seems to have absorbed the news, but certainly they're expecting earnings to come in a bit higher. And certainly looking at the kind of expansion project, it seems to be that the short-term problems seem to not impact on longer-term really where the positioning of the company.
Well, let's look at the other scale of things. And luxury stocks got a bit of a shot in the arm today on the news of potential stimulus measures out of China. But does this mean the problems that they're facing are completely over?
Well, I think if you look at last month, the Chinese consumer is still very weak and it come out one of the lowest confidence numbers we've seen. So I think we've had today a boost. But if you look at the likes of the LVMH, which is seen as the main luxury play, it's struggled this year. And certainly share price is down over 10%. In comparison, the likes of Hermes has been stronger because they've been able to go into the kind of more haute couture market. But if you look at luxury and it's kind of the Q2 numbers, it really was the Chinese market that impacted LVMH. So any boost, I think, has maybe been seen as a positive, but it's whether or not we actually see demand coming back and whether the Chinese consumer is going to return, and despite the kind of weaker confidence, and whether this is going to give them a confidence boost. So I think it's too early to tell, but certainly from a share price and reaction, it was good news for holders after it has been a difficult year for luxury retail.
Zoe Gillespie from RBC Brewin Dolphin, many thanks for your thoughts. And that's Market Insight. Don't forget you can watch more videos on Reuters.com.